What's going on, guys? It's Lewis here with Crypto Elite, and in today's video I'm going to show you how you can make insane gains finding insane trades in crypto. I just made 10% on my entire trading portfolio doing an insanely amazing trade. So I'm going to show you how you could figure this out, and I see some awesome trade setups on Bitcoin and crypto right now, so I'm going to show you those right after the intro. Okay, so the first thing that I want to go over is Bitcoin and what I saw yesterday and what I'm seeing right now. So yesterday we had the FOMC meeting and it had 75 basis points go off and everyone went wild, and there was a huge spike up followed by a huge spike down and everyone started freaking out. However, notice that let me get rid of all of this stuff so we're on the same page here. Notice this. Where did we have that huge spike down into? Well, we had that huge spike down right into or right below a support, a major support, and right into the major support, like the low of the support, right? So we had a spike down into the support area and everyone was freaking out. So before you start freaking out about things, check your psychology and check the charts to see where are we in the range. So this is what I do. I take the range low and I take the range high, have the 0.5 and the 1 set out. So this is the range low, this range high, this is what it is. What I do is I bring this and I adjust it to where I think it probably makes a little bit more sense. To me, that is right here, because this touch is 1, 2, 3, 4, 5 right there, and 6, and then 7, and now 8 and 9. So there's way more touches right here than there is all the way down here where there's literally just this one touch. So I like this area plus the 50%, 1, 2, 3, 4, basically 4 grabs of it plus a liquidity run. It just makes a lot more sense to have this bottom be right here. So what does that mean? It means that this is the bottom, which means that mostly all of the time when we hit the support, you want to be buying, or you want to at least be looking for buys. So yesterday was not the time to freak out. Yesterday was the time to actually look for buys. Also, I noticed on the RSI, look at this. We have the RSI bottoming out, going up, coming back, creating a bullish divergence because the price is moving down, but the RSI created a higher low, even though the price made a lower low. This is a bullish divergence on the daily time frame. That is really big. Not to mention, we also got yesterday the biggest daily MACD bullish divergence that we've had in a very long time. So that is absolutely huge because we have not had a bullish divergence on the MACD in a very long time. And you could see on the MACD, we came down and we started to come up. This right here was the low of the MACD histogram, and that happened right around here. Then we went up, we had the spike up, and when we came down, we had a new low in price, but we had a higher low on the MACD. This is bullish. This means that the momentum is shifting into the bull behavior, into the bull psychology, into the bull's hands, and they want to move the price higher. So that is a really good indication. That was a really good indication that, hey, we might move up. Now, what you have to do is you could just say, okay, I'm going to buy here, and I'm going to buy here, and I'll set my stop underneath here, and I'll target right here. That's a 4.77 trade. So you're buying at the support, you're putting your stop loss underneath the low, and you're targeting the mid. Not that bad of a trade, 4.77R, right? But check this out. Go into the 12 hour, and then you go into the 4 hour, and then you go into 1 hour, and then you go into 15 minutes, and you look for market structure breaks. So on the 15-minute chart, check this out. We came into the support area, right? We came into the support area, then we bounced up. First off, we had this huge wick on the FOMC meeting, and then we had the bounce up. What you need to be looking for is this. Move down, move up, creating the high. Move down, creating a low. Move up, creating a lower high. Move down, creating a lower low. Move up. This move up right here, let me delete this. This move up was higher than this high. So this created a higher high than here. That's already a market structure break. So technically you could get in right here. However, if you want to be a little bit more conservative and you wanted to wait until we got the market structure break, that looks like this. This right here, this pattern is a market structure, is a bullish market structure break. Then what do? You get in on the retest right there and you target the highs. So that is basically how you could find incredible trades. And you know what? Even right here, when we had the move down, the consolidation, aka the base, and the move down, followed by the market structure break right there, followed by the market structure break right there, followed by right here, the third market structure break. Let's say that this was the market structure break. What can you do? Well, you look down and you see this move right here. This right here is what's known as a bullish order block. Why is this a bullish order block? It's a bullish order block because it's a down move before the up move. Excuse me, it's the down candle before the up move that broke the market structure. And here was the market structure. This was the previous high right here and the consolidation zone right there. So it broke it. So you get in on a retest of this right here. And if you did that, this would be your entry. Your stop would go underneath here. Where would you target? Well, because we are on the daily support, you could technically target all the way up here at the midline. You'd probably want to target a little bit below there for target 1 and then the midline for target 2. So I would target the 61.8 at 21,000 first. But this trade setup right here, if we actually grab it and pull it up, let's grab this and pull it up. Look at this. 17 RR. 17 RR trade right here. Let's see if this plays out. This is a 17 R trade getting in at the bullish order block at the daily support and targeting the middle of the range on the daily time frame, even though you're getting in on the 15-minute chart. And this is something that I didn't know for a really long time. When I was taught that you want to get in on the 15-minute chart and you want to use the 15-minute chart for your exits, right? So if you get in here, you want to get out right here because you're using the 15-minute chart. But no, if you use the daily chart or the weekly chart or the 12-hour chart, the higher time frame charts, to pinpoint where the major support areas are, and then you go down into the 15-minute chart to get your entries and to get your stops and to calculate your trade positions, right? Then you could calculate your entries and your stops super, super tight, go back to the daily time frame, and then target the highs. This only works at the lows and the highs of the range. This doesn't work in no man's land, and this doesn't necessarily work in the middle range. It only works at the lows and the highs. So you have to be careful with this. And this is what I'm teaching in my course. This is what I'm really like hammering home. So this is amazing. This is how you can put on insane trades with insane risk to reward ratios. And that is one way how you can make insane gains in crypto. The other way how you can make insane gains in crypto is by playing the narrative. So what narrative is there right now? XRP. Now, I have not talked about XRP in years. Literally, it has been such a long time since I talked about XRP. Why? Because Jed McCaleb and the owners of XRP have literally been dumping on everyone millions and millions of dollars every single time they get a chance. And they're, I saw them on their yachts and with their girls and doing everything, spending all of the money that all of the XRP army is giving them willingly because they're dumping. They have been dumping. However, last week I made my very first video about XRP. And I said, XRP, time to buy. And I basically explained why it's time to buy. That was down here. That was down there. All right. It's up 25%. Excuse me, 35%. And this is how I just made 10% on my portfolio. It's because I played the narrative. Okay. I played the narrative and I saw that this was a major resistance. This was a major support, turned into major resistance. It busted through the major resistance. So use it as an SR flip. You could put it as an SR flip. You could target up here. That's 24, 25% gains on a 5R trade. Are you kidding me? So if you want to make insane gains in crypto, look at the charts, look to see where the daily or higher time frame bullish divergences are, and look for narratives and then go down into lower time frames, or even on this one, you didn't really have to go down to a lower time frame, but go down to lower time frames, find your entries and your stops, put your trade on, and then let it play and let it ride. Hopefully you learned something from this video. If not, join the VIP. There's a link in the description. I did put bullish divergences on the daily RSI and MACD at the bottom of 20% of the range and demand zone, and the Stoch RSI and the stochastic RSI is oversold territory too. And I also said XRP is still the best play, in my opinion, due to the narrative around it. I talked about XRP a ton and really tried to push XRP hard in the VIP. I even put it in the free chat. So join the free chat. There's lots of alpha in there as well. Took my profits on XRP, but I did post up time to buy XRP. This was 2 days ago. It's up 35% while the whole market is red. Get out of here with that. Get out of here. It's too good. Anyway, I just had to make this video. I'll make a market update video soon. Keep on stacking those sats. Keep on making those gains. Peace.